So, if you've been avoiding your business all year, you're not alone and you're also not out of time. We still have time this year, okay? In this video, I'm going to talk about some simple moves that you can still make before the end of the year, before December 31st, that could save you thousands, thousands. So you want to pay attention. So let's fix this now in a way that's going to be calm, that's going to be doable, and it's going to be so clear to you. Let's get into it. But first, my name is Chika, and I've been a CPA for over 15 years, helping business owners just like you gain clarity and understanding around their numbers so that they can minimize their tax bill the low stress way and the straightforward way. Now, let's get deeper into this video. What's the problem? What happens? Most entrepreneurs, they overpay because when it comes to their numbers, when it comes to finances, they tend to shut down. They shut down because it feels messy. They shut down because they don't know where to start. They shut down because they feel alone. And oftentimes they don't know what matters and what doesn't matter. Is this something you can relate to? Oftentimes they assume that, oh my gosh, it's too late. Right now, we're at the end of the year, we're in Q4. So they think it's too late and they take zero action. And I'll just say that when you avoid, when you do nothing, who benefits? It's not you, it's the IRS. So we need to change that because right now that is a huge problem. The beautiful thing is you don't need to overhaul your whole business. You don't need to start over, right? You can start exactly where you're at. And what you need to do is execute just a few targeted high impact moves. And I've been doing tax work for over 15 years. And so we're going to get into 5 different moves that I see entrepreneurs skip every single year. And the fact that you're here with me, you're going to be able to overcome this once and for all. All right. So the first year-end move is cleaning up your bookkeeping. Now, with bookkeeping and cleaning it up, the beautiful thing is it doesn't have to be perfect. It just needs to be accurate enough. And what does that mean? You better not be guessing numbers out of thin air. You want to be pulling out your bank statements, using those monthly bank statements to put together your numbers, your profit and loss statement for the year. And so whatever it's showing on your profit and loss statement as income, as revenue, when we're looking at the bank statements, we're looking at payments that has come through, whether you use PayPal or Stripe or Square, whatever you use, when you total it all from bank statements and from different reports, again, such as Stripe, it needs to add up to what is showing on your profit and loss statement because you use your profit and loss statement to file your tax return. And so you want to make sure that the numbers are accurate. And also, let's look at expenses. So we just talked about income and how to make sure that you're capturing all those numbers. Now, with expenses, the thing about that is if you're missing expenses, if you're not tracking your expenses, 10 times out of 10, you are overpaying the IRS. And that needs to stop today. That needs to stop. And so the best way to do it is, first of all, make sure that whatever you're using to pay for your business expenses, right? Ideally, you're using a business bank account or a business credit card or a debit card for all business transactions. And so by doing it that way, you just have that one account, maybe 2, but they're all specifically for business use. And so you're not commingling business and personal and just mixing it all up in all these various accounts. Because if you do it that way, more than likely you're gonna forget things, it's gonna be messy, it's gonna overwhelm you, it's gonna stress you out, therefore you're not gonna do it. Okay, so use the one account, whether it's a credit card, whether it's the debit card. And personally, I like to use credit cards. I'm the type of person who loves to get my points for travel and things like that. So whatever you enjoy, you can do that, right? You can personalize it to yourself. And then also, as it relates to cleaning up your books, you want to make sure you're categorizing your transactions by expense category. So, for instance, usually things are all kind of just random, but if we can categorize things in their buckets, so for instance, okay, these are office expenses, things from Amazon, maybe Target, Walmart, right? Generally, those are the type of stores where we get office expenses or even supplies. Now, it might be something else. Let's say you have bank fees, right? That's its own category. Think about equipment and furniture, things like that. Like these are various types of expense categories that you can create. And the beautiful thing is you don't have to come up with these categories on your own. If you look at your tax return, so for instance, if you're a sole proprietor, you'll see that the Schedule C that you file for reporting your business income and expenses, it lists the main type of business expenses on there. And so that's a little cheat code for you. You can figure out, okay, what are the main categories of expenses that the IRS recognizes? And so if you're using a spreadsheet to keep track of your numbers, you can use those similar expense categories so that you can keep things organized, right? Keep your expenses organized by category, which will make it easier when it's time to file your return. Okay. And now let's get into the second move. Move number two. Move number two is to capture missed deductions. Now, of course, sometimes when we don't know what's a deduction, we don't know what we're missing. And so let me tell you about some of the often top missed deduction or write-off. So as a business owner, especially if you work from home, you can write off your home office expense. And oftentimes, whenever I'm looking or reviewing at a business owner's tax return, they miss this one. And this one can shave off thousands of taxes each and every year. And you are owed the deduction, meaning if you work from home and you can substantiate requirements for taking the home office deduction, then you can capture this deduction. But again, it's often missed because it's not so easy. Like, oh, I pay 2,000 a month in rent, so I'm going to deduct 2,000 a month on my tax return. No, no, no. It doesn't work like that. Because remember, with your home, there's also a personal use of your home, right? And so you have to figure out the ratio. And I actually have a tax deduction checklist that goes into detail on that home office deduction. It tells you the who, what, why, how to do it. So check that out in the description box below. You can download it, it's free, and really learn more about the home office deduction and how to capture it so that you're not missing out on thousands in savings. Another one that people often miss is cell phone and Wi-Fi. And again, these are some where there's a personal and a business aspect, right? Usually we have one cell phone, and because we're business owners, there's going to be a business piece to the phone and a personal piece. And so again, in my tax write-off checklist, you can find out more about the phone deduction. Another one that people tend to miss is professional development, right? How many times are you paying for a business coach or you purchase a course that is going to help you get better at creating your website? These are professional development or even business development type of purchases. And because they help you in your business, they are deductible, they're write-offs. But for whatever reason, people think that because it's for themselves, right, to improve your knowledge, they think that, oh, it's not deductible. But think about it, is improving your knowledge to run your business successfully. So because there is that business piece to it, it is deductible. And generally, it's going to be deductible 100%. Okay. Those are just some of the missed deductions, the often missed deductions. There's a few more, but again, I talk about 7 of them in my free checklist. So just grab that below so you don't miss out. Now, let's get into the third year in move. So, the third year in move is to make your final purchases strategically. So, think about it. Right now, we're in November. We have 1 month, 1.5 months left of 2025. It's coming to an end. It's so, so fast. And so, one of the strategies that I often share with my clients is like if you know you have some big purchases coming up in the new year, how about we consider paying for some of those things now to reduce your taxable income, which will reduce your tax bill for this year, right? Because after December 31st, anything you do is related to the following year. And so oftentimes this is a strategy that is specific to business owners who maybe they made way more than they thought they would make, right? Business was good, their profits are high. And again, they had plans to purchase things maybe in January or February or March, but it's like, how about we bring in some of those transactions into this year, right? The tail end of the current year. And by doing that, we can shave off some of that net income, that profit number, thus reducing taxes now. And so the key with this move is I don't want you to just be buying anything because, again, that's wasting money. So you don't want to waste money. Think of it as an investment, things that you were already going to buy. For instance, I have some business trips set up January, February. And so I can wait to buy the flight, but no, it's like, oh, my profit's looking good. I can afford to buy those flights now so that I can shave off a few thousand in profit, which will reduce my taxes. Hey, it makes sense. I got the cash to do it and I'm going to do it, right? So that's a huge one because oftentimes we're able to save clients 5 figures, damn near 6 figures, depending on what they were already intending to buy and what their profit number is already looking like. All right. So some of the big type of expenses that you might consider purchasing is maybe it's software, right? Like oftentimes these software companies, the renewal time is in January, but is there an option to pay for it in December, right? What about equipment upgrades? Oftentimes, especially if you have a home office, and so maybe you want to redo your office space. And so you get that new table. Maybe you want the standing table. This is a perfect time. And think about it too, Black Friday. So not only are you paying for those things, investing for those things now, you're also getting them for a lower rate because oftentimes there's sales going on, right? So it's a win-win-win. So think about that. Well, before we get into number 4, I want to just tell you real quick that I am hosting a free masterclass that's going to walk you through the 5 most important strategies to make before you're in. So we're going to dive really, really deep. And with these strategies, you're going to be able to keep more of your money instead of just handing it over to the IRS. So if you know that you've been avoiding your numbers and now we're at the year end, then you need to be there. It's a free masterclass and it's going to really get you far with making moves for the new year to make sure that you are optimizing your taxes now. The link is in the description. All right, let's keep going with move number 4. So number 4 is you want to check your tax payments. Check your tax payments. Maybe you haven't made any quarterly estimated taxes all year long, yet you know that you're in a profitable position. It's best, even if you've not made any payments during the year, any quarterly payments, it's best to make a payment in Q4 as opposed to just waiting until you file your taxes in the new year, March or April. Because why? Because one is going to minimize any penalties or any interest that the IRS might assess because of late payments, for instance. Okay, so this is specifically for those business owners that are not employees within their company, meaning they're not a corporation. Generally, you want to make your quarterly estimated taxes. Or let's say you are a corporation, you're an S Corp, or you're a C Corp, you can still make quarterly estimated tax payments if you know that the withholdings that you have on your salary is not enough to substantiate or to cover your tax liability. So, quarterly estimated taxes, that's something that we're going to talk more about in my masterclass. So, go ahead and make sure that you're signed up because if you're underpaid, then there's going to be a penalty. So, you could potentially avoid a penalty or reduce the penalty by making quarterly estimated taxes in Q4. All right. So, just know that this one move alone can save you hundreds, if not thousands, in taxes. Because oftentimes I see the clients that are making $1 million, multi-million dollars. And so for them, a quarterly payment is like 50K. And so imagine them skipping a quarter, 50K, another 50K, another 50K, almost 200K in taxes, and they've paid zero. So imagine a 10% penalty. Sometimes these IRS penalties are upwards of like 25% with time, of course. And so it can add up. It can really, really add up. And no matter how much you're making, you just want to get into the habit of doing the right thing. Do the right thing. Okay. Now let's get into the fifth move. So, the fifth move that you can be doing to make sure that you're secured for the new year is to prepare for the new year, prepare for 2026. Now, we call it tax planning, quick planning, and by implementing tax planning in Q4, you'll have a calm, peaceful, easy January, right? The new year will start off fresh and lively and low stress. And so this is the time, and I have you covered. You can grab the free checklist, you can sign up for the free masterclass, and even a little bit later this year, I'm going to have a tax planning extravaganza virtual event for you. So really make sure you stick around with me because I got you covered for this end of year. And along with preparing for 2026, you might want to decide, am I the right entity right now? Let's say you're a sole proprietor, you're an independent contractor. Is that the best structure for your business? And of course, there's questions to ask to figure it out. And for every business, it's a different answer. So I can't give you advice on that right now, but just know that that's one of the questions to ask yourself and to determine. Maybe you work with an accountant to determine, like, am I optimized in the structure of my business as it relates to taxes? Does it make sense to form an LLC, to elect being taxed as an S corporation? These are questions to just ask. And if we're asking questions, we're getting curious and we're more inclined to take action. But if we have our head down, we're feeling overwhelmed and stressed, and we're not taking action, then yeah, you're going to be in a worser position. So definitely you want to do some planning. And even if you do nothing but show up to what I got going on this end of the year, you'll be fine. You'll be fine. All right. And I mentioned this earlier, but you want to decide your accountant. Who do you work with? Have you been working with someone? Have you been thinking of hiring someone? Have you been thinking of switching? Right? Think about that, assess that. Oftentimes, that just because you've worked with an accountant for years and years and years, maybe they are the same accountant that your family use, your parents use, just because that's the fact doesn't mean that they're still the right accountant for you. Once upon a time, I was more of a tax preparation type of accountant. And as of recent, the last few years, I'm more about tax planning. And so, yes, I still will prepare your return, but only if you are a candidate for tax planning. And generally, like substantial tax planning is for people that are maybe business owners, very highly profitable investors, real estate, multi property, lots of investments, right? Those are some of the reasons why someone would really truly need some complex tax planning. And of course, if they're hiring me to do that, to take care of them with that, then yeah, I'm going to file their return. However, some of my clients, they don't need such complex plans. They don't have complex situations. And so they've decided that, oh, Chika, like you're amazing, but I don't think I need this. And I agree. And so they make decisions to find the accountant, the CPA that's more aligned with their needs. And it's totally okay to find someone who's aligned with your needs. Okay. And I have a video all about how to find the right accountant. And so that's a very, very helpful video. So check that out when you get a chance. So those are the 5 year-end tax moves that you should make before 2026. And again, they were pretty straightforward. All it takes is the courage to take action. Okay. You just sit down and maybe you choose one. Which one are you going to tackle today? Spend an hour and you can break it up so that it doesn't feel overwhelming. And again, continue to follow along with me. I've got you from now to the end of the year. You follow along with me, you'll be in a good place. And if you want year end to finally feel clear, not chaotic, then what you want to do is join my free masterclass, which is called Your Last Chance Guide to Year End Tax Savings. Even if you've been avoiding your numbers all year long, I've got you. Join this masterclass and you're going to walk away with the clarity that you've been craving. And you'll walk away with a plan that you can implement within a weekend. So check out the description box below. Again, my name is Chika. Until the next time, peace.